I saw that in several areas there were very different positions. For example, when it came to counterparty risk, the approach is different. Can you tell us a little bit more about the Campbell approach and your approach?
So in terms of counterparty risk, obviously a big focus now. Not only is it something that we have to value in terms of all our derivative positions, etc., with regard to our counterparties for our financial statements, but also more importantly, as we think about future business to give to our counterparties, looking at counterparty risk is front and center for us, right? We have tried to use as much as possible technology in helping us address some of the issues of being more on top of it real time. So I was talking about CDSs and how we try to look at that as a measure of counterparty risk. I think the crisis has shown that a lot of the traditional measures, such as credit ratings, are often very dated and is subject to a fairly lengthy review, etc. And often I think it's one of those where often it's after the fact. We try to be a little bit more, we are trying to be at least, I'm not sure we completely succeeded, but we are certainly trying to be much more current on top of it. And so we use these kinds of tools such as CDS, etc., and within limits. I mean, there's, one of my colleagues here, Navneet, was talking about you can't take it to the full extent. There are certain geographic limitations. There are only a certain number of players, perhaps, in a certain market, and so you have no choice but to deal with them. But by and large, I think it's getting to be less and less of a problem as most of these banks become global. And so you can actually take a lot of these tools and apply them across all banks, across all geographies, all regions.
One of many topics raised today was also the issue of regulation, the lack of common regulation on the global side, and then sometimes the lack of clear rules in terms of regulation. How much is it affecting now your role as a treasurer?
I think if we had to twist and turn for every potential change in the regulation with a lot more gray hair, I think my philosophy is just I let a lot of the dust settle, because so much of it is actually being written. Literally, I mean, the Dodd-Frank was a prime example of it, right? It's still being written, and yet at the same time there were certain deadlines, and then they kept extending certain deadlines, and so we kept running after a particular deadline, and then just before the deadline hit, we found it got extended 6 months, for example. It's a bit frustrating because you put a lot of effort and time into these sorts of things, So I think, from my perspective, there is a lot of regulation. We have to be on top of it, but take it with a grain of salt as well, because a lot of it it'll get sorted out over a period of time. I think, like as Dodd-Frank, for example, is one example of that. It will get sorted out over a period of time, and we just got to make sure we don't, grow old in that period.
You mentioned innovation earlier, the fact that innovation is a factor in what you're doing these days and the way you can do really fulfill your role. Can you tell us more as far as what innovation is now on the Treasury side?
I think a lot of the innovation is at the cutting edge of where technology comes in to make our job easier, right? So simple things like the EBAM platform, for example. That's innovation, because it's a real pain in the job to keep track of bank accounts around the world, the signatories, it's basically primarily a paper chase right now. The fact that, the technology is all available. I mean, we have ways of electronically, warehousing data and all that, but somehow it hasn't come together in a nice tool, and now we're finally seeing a lot of that coming through. So EBAM is a nice way in which I think innovation certainly helps. The Treasury workstations have been a godsend. I mean, the ability to see, real time, the cash balances worldwide. That's it's been a holy grail, but it's now widely available. But the innovation is there, but at the end of the day, the 1 + 1 still equals 2, and there's still a lot of old-fashioned diligence that is still as important, still requires the human touch in all of that to make judgment calls about things like credit risk, about collections, the viability of a customer. There's still a lot of experience that comes into judging a lot of these situations. So technology can help, but that's the beauty of the job that we do. Effectively, it's a nice mix of the cutting edge, old and new things, and it's changing all the time. I mean, there's news bombarding us all the time, which we need to react to. I mean, the crisis that we saw a few years ago, the financial crisis, made us change a lot of things. It wasn't technology. Of course, in some cases, we use technology to respond to it. But the funny thing that occurs is we suddenly discover that some of those old principles still applied, that many people forgot. You still only should lend money to people who can afford to pay it back. How revolutionary is that idea, But we rediscovered it. In fact, all the banks suddenly rediscovered that, right? And so it's funny to see these sort of cycles play out over and over again. And, all these new regulations, frankly, it's only as good as the next crisis, right? And then, there'll be another convulsion, and then, everybody will get religion again, and then they'll try to, and over time it'll start to slip back, and, we'll get another convulsion.